Yohan, thank you so much for joining us here at SuperInvestor.
Thank you so much for having me.
You've been talking today about ESG. How do you see the pandemic as having affected this area, and has it created a turning point, if you like?
Yeah, I think that's a great question. I think the pandemic has more or less crystallized the recognition that sudden, unexpected, unprecedented events can have a huge impact on societies in terms of the economic impact, the political impact, the impact on our lives, how we live every day. I think those companies that perhaps are better at managing those non-financial risk factors are likely to be more resilient to those sudden shocks. And therefore, I think it's crystallized the view that ESG can be a way to mitigate risks and manage risks within an investment portfolio.
Because you believe the companies that were already concentrating more on ESG were the ones that proved to be more resilient in that extreme situation?
Certainly, yeah. I think it's a case that those companies who are better at managing their employees, better at managing their supply chains, and better at just managing their businesses from a non-financial risk point of view are definitely better able to cope with these catastrophic events. And I think the pandemic is just a case in point. But equally, I think what we've seen is that companies that provide solutions to challenges that society faces, whether it be environmental or social challenges, they're able to do well financially as well, and consequently receive better valuations from investors. So
investors are seeing the benefits a lot more.
Exactly. I think there's definitely the upside from ESG management, ESG integration that companies can see when they're doing it well. What I would say though is that I think the industry as a whole is much better at integrating ESG factors from a risk mitigation point of view. I think that's more or less understood and agreed that it makes sense to do that. I think going forward, I think what we'll see is increasingly that investors take ESG factors into consideration when valuing companies, and I think that's the journey that we're on as an industry to integrate ESG factors in corporate valuations.
What will be key to that? Presumably something like good measures.
Oh, absolutely. I think data is critical. In public markets, there's much more data available than in private markets, but I think over time we'll see that gap diminish. I think there are a number of initiatives out there to standardize reporting, so we're seeing that in the EU, for instance, to some extent here in the UK, but also in the US and in other places, that there's a move to standardize that data so it can be made more available in a credible way to investors to be able to use comparably.
And presumably that makes it harder to greenwash as such, because you've got to have the hard facts there.
Yes, hopefully. And every investor has a different point of view on ESG. ESG means different things in different industries. I mean, the underlying issues might be different. And then you also have these intermediaries like ESG ratings providers or ESG data providers. And so it's a very complex topic. It's a very complex field. But hopefully some standardization around the reporting and the disclosures will simplify that somewhat and provide some consistency in how that information is shared.
Talking about the complexity there and the different meanings, if you like, and definitions, there's a lot of emphasis on the E in ESG at the moment. It's obviously at the forefront of lots of people's minds. But what about the S and the G, and how do companies ensure that they're actually covering all those bases?
Sure. So I think historically and currently, I think climate change as an E issue is very much a big issue that's probably a high priority for almost all investors and asset owners. But we're seeing other issues come to the fore on E, but also S and to some extent G. On the S side, diversity, equity, and inclusion has also come up the list in recent years, and certainly for the North American investors, that's a big factor, perhaps even bigger than climate at the moment in terms of their priorities. But I would say that at an industry or a company level, the ESG topics that matter will vary quite substantially from company to company, from industry to industry. And I do think it's important to focus on those topics that are financially material when looking at a particular company or when looking at a particular industry. I think that adds some complexity to the case, because not all topics will matter in the same way and to the same degree from company to company, but there are some standards that are being developed by bodies like SASB, the Sustainability Standards Accounting Board, and others that will hopefully make that a little bit easier to manage.
There were some comments today about the fact that ESG is on the agenda on day one. It's not hidden somewhere far down the agenda on sort of day three. It's now top of the list. Is that going to be really helpful to this industry's reputation as well, if the general public and investors believe that private equity is on board with ESG fully and comprehensively?
Well, ESG has been rising up the agenda for a number of years. Even in private markets, we've seen assets under management increase quite substantially over the last decade. The number of LPs and GPs who are committed to ESG in terms of an ESG policy and our UNPRI signatures, for instance, has steadily increased. So I think it's definitely a long-term trend, not just a recent trend, and that's driven by, I think, the increased pressure that is being put on private markets or investors in private markets to integrate ESG issues by both regulators and asset owners who are increasingly allocating more capital to private markets. So I think there are big systemic changes that are driving greater transparency in private markets and making ESG much more a part of the conversation that we're having, especially as we diligence deals and as we have those conversations ourselves with our investors.
As a member of the private equity community, though, does it make you happy to think that this is something that this industry can be connected with properly now as well, and that you can play a part in the greater good, if you like?
Yeah, absolutely. I think it goes to my earlier point, which is that ESG factors are risk factors. They are ways in which risk can be manifest in any particular industry, and to the extent that we're integrating it, it also makes business sense for us as investors. So from that point of view, I think it's sensible as well as philanthropic, shall we say? It's sensible as well as I think the right thing to do. Equally, there may be opportunities associated with ESG investing in terms of value creation and also commercial opportunities as we try to address some of these global challenges.
Talking about opportunities, we're all here back in the room together at this event. How nice is it to be able to have conversations and see people again and share ideas?
Well, you know what, it's quite interesting. This is my third event for the year that I've been to, and I think perhaps this is the one that feels closest to how it was before the pandemic. So that's interesting to see, and it's nice to see everyone come out, and good to have that interaction. But I'm really a fan of the flexibility of having the online world. So I don't want to lose that at all.
It is nice to have you here with us, though. Thank you, Yohan. Thank you so much for joining us. Thank you.